Alright.
Ready?
Everything good?
Everything great.
Hair's good?
Yes. Cheers!
There we go. Alright. Hey everybody, it's Tiffany. Welcome back for Tax Talk. I know we haven't had one in a while, but this is Carolina.
Hi everyone, I'm Carolina Bojanowski.
And she just graduated college and she has a whole bunch of questions about taxes. So she made up a list for me and we thought it was a really good time just to answer questions. So this is just off the cuff. It is not practiced. So we are just having a tax talk. So welcome.
I basically had a bunch of questions going through my own taxes this year, and as a recent college graduate, I thought it would be really interesting to kind of see what the answers to these basic tax questions could be, and I thought that it would be a really good opportunity to kind of get the knowledge and information that is needed to understand these taxes. So further ado, my first question is, how does the U.S. tax system work?
That's a huge question. How does the U.S. tax system work? Well, that's like a dissertation and a doctorate. So what we're going to start with is just basically the U.S. was set up, or is currently set up, as a pay-as-you-go system, which is why they do withholdings from your paychecks to pay your taxes as you go. We do tax returns because not everybody withholds the right amount. There's self-employed that needs to pay additional tax. There's deductions or credits that people might get that, when they're withholding from your paycheck, they don't know what those are. So we do the tax returns to kind of offset all of that and make sure everybody's paying what they're supposed to be paying instead of too much or too little.
So it just makes sense, kind of it's very dependent on the person, I'm assuming.
Correct. Everybody's different. Everybody's different. So when everybody goes, oh, but my neighbor had this or got this back, well, their situation could be entirely different because everyone's family life is different, different dependents, different ages, different everything. Everything's different. So
I definitely noticed that too, especially every year that I've done or filed my tax returns, based on the positions I've had, obviously it's been completely different. So that makes complete sense as well.
Good.
So my next question is, what are kind of the different types of taxes? So I wrote down here income tax, sales tax, property tax. I think a lot of the different terms of just each individual tax kind of gets me confused when I'm doing my tax returns. So kind of just what is the main difference of these taxes essentially?
So income tax is based on your income.
Yeah.
Okay, so they're going to tax your income based on your filing status, so single or married or head of household. Each one has a different tax rate, so that gets taxed differently for everybody. And then you fit into different tax brackets, right? The more your income grows, so then that gets taxed a little bit more as your income grows. Property tax is based on local, county, state, whomever, and every state's different.
Is it by each county and country and state? Or sorry, state and city?
So here in Orange County, it's the county.
Okay.
So I can't speak outside of California because
Gotcha.
everybody could be different, but usually it's the county that does your property tax, and those property tax fund things like schools and projects that they're working on for the city, things like that. So the property tax helps your local community basically.
Got it. All right. And then I believe that kind of bleeds into my next question, with the U.S. tax system and overall the different types of taxes. What is the IRS? What does it stand for, and what does it essentially do?
Okay, Internal Revenue Service.
Okay.
Is the IRS, so that's the federal taxes, right?
Okay.
In California, we have the Franchise Tax Board, so F like Frank, FTB. That's our state tax system. But the IRS basically collects the taxes from everybody to distribute within the federal government. So for national parks, for things like that, all of that comes from our taxes. Funding for all the departments basically come from our tax. Well, the whole federal government comes from our taxes. So the other thing is Department of Education, puts funds out to the states because it's federal, and then it gets dispersed. National parks gets dispersed. Everything in the U.S. government gets dispersed because of our taxes. Now, one of the things that's been brought up lately is, well, one state has a lot more people than another state.
Yeah.
That's why everything goes into a pool and gets split. So you don't get what you give. You get what's or you give what you have, and then everybody gets what's needed.
And then is it leftover money stay, or is it just like split evenly or everything like throughout the? Is it federally?
Well, the federal money gets dispersed,
Yeah.
but that's determined by Congress on how it
Okay.
gets dispersed. So that's why,
Got it.
Yeah.
Alrighty.
Try not to get too political.
Yeah. Next question. I think it also, you kind of answered this already, but the difference between the federal, state, and local taxes. That's, I'm assuming, like with the IRS would be the federal level.
Correct.
And then the state and local is kind of run by.
Yeah, so we don't have local tax here. Some other
Okay.
states have local tax. We have sales tax locally,
Yeah.
but we don't have local tax. Some other states do, but we don't. Sorry, but California doesn't do that right here in Orange County anyway.
Alrighty, and then this is kind of like bleeding into a different territory, but like foreign taxes in a way, like.
This is tax 101.
I guess like just like the base level of like if you were in a position where like you were abroad or something like that, like how would the foreign taxes work?
As an American citizen, technically the rules are you're supposed to pay tax on worldwide income. That's actually what it says. It says worldwide income. So when you work abroad, obviously you're probably going to pay taxes to that country usually. So in the U.S. we have a foreign income exclusion for wages that you earn elsewhere. So you still would file here, exclude X amount of income, and then credit for taxes paid to other countries. So we're trying not to double tax you. Does that mean it's going to be 100% not double taxed? Not necessarily, but yeah. But every country has its own treaty on how they tax you too.
So also very dependent on each country.
Correct.
Got it. Alrighty, and then going back to kind of the basics, what are the different types of like filing you could do on your tax returns?
Okay, so yeah, we covered this a little bit. So single, which just means single. Head of household, which can mean different things, but people often think of it incorrectly. It's usually meant for like single parents. So a lot of people that are supposed to be filing single think they're head of household because, as they say, I'm the head of my household, but that's not the case. Head of household is usually for single parents. And then we have married filing joint, where the two people that are married file together, and then married filing separate, and there's different rules for every state on married filing separate. So like California is a community property state, so it gets a little
What does that mean?
tricky. Community property means everything is 50-50.
Okay.
So that's a whole nother lesson. But married filing joint is a better tax rate than married filing separate.
Okay.
Head of household is a better tax rate than single.
So same thing where it's like just all these different levels, but like it's just so dependent.
And those are, I mean, there's some other ones too. There's like a qualified widower thing, but we're not going to get into that. But yeah, those are the basics.
Then going along, how do tax brackets work, and kind of what's like an example of each one?
So I don't have tax brackets memorized, but every bracket is different for every filing status. So we just talked about the filing statuses, right? So for example, if you make like $15,000, not much, right? But if you make $15,000 as single, it falls into one bracket. Well, let's make it higher. Make $100,000 in single, it's going to be in one bracket, but it's going to possibly be in another bracket for the other different filing statuses, because they want to make it more fair, right? So if I fall into, let's say just for easy sake, there's a 10% and then a 20%. It's not 20%, but we're going to make this easy. If you have a 10% tax bracket and a 20% tax bracket is the next one, whatever amount is over that 10% tax bracket is actually what gets taxed in that second tax bracket. So your whole income is not taxed, and that's what people think.
Gotcha.
but you never ever pay what your tax bracket is. You always pay less than your tax bracket. You pay what's called the effective tax rate, which is your taxable income, and then they subtract out the standard deductions and any credits you might have, and then that's what you actually pay tax on.
And then what were like the standard deductions versus itemized deductions? Like,
So,
what's the difference between that?
Good question. So standard deduction is just anybody can take it. Itemized, so standard deduction for single is $14,600 this year. It changes every year. Every year they go up. So you have that as your standard deduction for single. If you itemize, it's things like mortgage interest, property tax, charitable contributions, sometimes very, very rarely medical expenses, because most people don't have enough medical expenses to claim because it's over what's 7.5% of your income. It's the amount that's over that. So don't worry about medical expenses unless you like have just a ton.
Okay. Alrighty.
So we take whichever one's higher, whether it's standard deduction or itemized deduction. Unless you're married filing separate, they both have to do the exact same thing.
Oh. Okay.
If one itemizes, the other one has to itemize.
Got it. So it just has to make sure that if you're in that filing status, it has to be the same.
Yeah.
Okay.
So, I mean, one person could just not have anything to itemize, and it's like too bad, so sad.
Yeah.
You just,
Interesting.
Yeah.
Okay. My next question was, how do I know which tax forms I need? I feel like at least like growing up, like knowing like and doing my taxes, like I was just told like, oh, utilize this site or website to do taxes. Let it like automate for you and do your tax return as well. I feel like for me, like when I first received my first like W-2s, like it was just like kind of like, oh, what is this? Like, so I'm guessing kind of just like what are like the basic forms for like tax returns and tax filings that like maybe a recent college grad should know.
So it used to be a lot easier. It used to be where you had something called a 1040 easy, like the letters EZ, because it was easy. You did that when you were single with a W-2. Now they don't have that anymore. So you would do the 1040. Everybody does the 1040 now. That's the main federal form. And then depending on your state, some states have state tax, some states don't. So everybody's going to start with the 1040 for federal, and then whatever else you have is dependent, which schedules you use or forms. So there's different schedules and there's different forms.
Gotcha.
And that's also why I usually suggest a tax person, because once you get to know the system, meaning I know I'm working, I'm going to get a W-2, I know I'm investing, I'm going to get a 1099-B maybe. I encourage people to work with somebody, because as their life starts growing, their taxes start getting more complicated. And if you start with that person when you're just with a W-2, when a tax return is going to be inexpensive to get done, this doesn't mean you have to do it. You can do the free e-files and all of that if you're comfortable with it. But if you start working with someone, they have questions they can ask you, and they know what's going on with your life that may apply to your tax return that maybe you don't, because it's always a puzzle, right?
Yeah.
And you don't know what you don't know.
Exactly. So you definitely recommend kind of like making sure that you're keeping and filing all those W-2s and like every year, and not like getting rid of them as well. Like,
you're supposed to save everything for 7 years.
7 years,
and that's typically
gotcha,
the year range that they say. But I just want to touch on something, because not everything is a W-2 that you receive, because people get confused on that. They think every form they get is called a W-2. There are different forms you get from different entities. So when you work, you get a W-2 or a 1099.
Yeah, I've heard of 1099 before. What is that?
So 1099 NEC is the new version of it. It's self-employment. So employment taxes don't get taken out of that.
Okay.
So no withholdings get taken out, no Social Security, no Medicare. So then you're liable for those. You have to pay for those. That's self-employment tax.
I see. And what's the like average withholdings, or is that just dependent on like?
It's just dependent.
Okay, gotcha.
But I will say, if you are single, don't let someone talk you into crazy withholdings.
Okay.
If you are single, just mark single, and don't try and do anything crazy. You might have to have additional withholdings. If you're in a state like California, we still do exemptions. That's why we say do single zero, to make sure that you're withholding enough, because we don't want you to owe at the end of the year.
Got it.
Do not mark exempt. Don't do it
Don't
under
do it.
any circumstances.
I guess this also maybe changes like every year, but what in your professional opinion is maybe the easiest way to file these taxes? And I'm assuming we kind of like covered it with you kind of like wanting to stick with the tax person and kind of knowing your life and kind of knowing like the puzzle pieces to like make those returns. But what is like the deadlines within tax? Like, are there multiple? Is there like, when should I kind of like be on top of like my filings and knowing kind of like when in the year I should be doing some certain things for like my taxes?
Good question. Okay, so tax day is April 15th. So everybody should have everything filed by April 15th.
And that's the same every year?
Unless it falls on a weekend or a holiday, but keep in your brain April 15th. Just
Gotcha.
always think April 15th for your personal individual taxes. There are different deadlines for entities, things like that. March 15th, which we're coming up on. So your W-2s have to be sent out by the end of January. So you should expect them by the end of January. Mid-February is about when most of the investment stuff gets sent out. February 15th, or sometimes even a little later than
And
that.
what does that mean by investments?
So interest, dividends, stock sales.
Okay.
So those come out a little bit later, which is why some people can't file as soon as they want to. But there's a lot of documents now that you have to wait for because there's things that we need, and if we don't file with them.
And the more like kind of complicated the like career or like kind of thing is, the more you have to wait to file those, I'm assuming, right?
Kind of,
The deadlines? Okay.
Yeah. And then you have, that's all. Yeah. Tax 101. Tax 101.
Yep. So I guess from there, like, these questions are more of like when I was going through like filing my own taxes. So these kind of just popped up randomly, but one of the ones was, what is the difference between a tax deduction and a tax credit? And kind of like, when should I know it's a positive thing to be utilized or like receive, essentially? Or if they're even positive?
Okay. So deductions reduce either your income or your tax, depending on where it is. Okay, so we talked about itemized deductions and standard deductions. Those are going to reduce your income, right?
Yeah.
If you're self-employed, you have expenses, those are deductions too. Credits are things like earned income credit, child tax credit. What those are going to do is give you money.
Okay.
So when you're looking at like your effective tax rate we were talking about, if you're getting more credits than you paid out anything, so say you're getting everything back that you had withheld and credits, you're going to actually have a negative effective tax rate. You're getting more back than you gave because you're getting everything back. That's, a positive, right? Because you're getting stuff back. But deductions can also be things like student loan interest, teacher expenses for teachers that are in classroom, K through 12 teachers. But as a college student, you're probably gonna more have, tuition.
Yeah.
Right? So you're gonna reduce the tuition. There's some have credits, some are deductions.
Okay.
For tuition. Obviously credits, better, right?
Yeah.
Because that's dollar for dollar back.
Yeah.
A deduction reduces your income. You get, about, give or take, a quarter back for every dollar.
Okay. So essentially, like, they're both kind of good in a way.
Yeah.
But like credit would be more.
Credits are better because credits are dollar for dollar.
Got it. Yeah.
Yeah.
Awesome. And then it leads me to my next question. But what are some common like tax credits and deductions then? Which is what we just talked about with
so
like the
earned income credit's a big one. Child tax credit. Those are the big ones.
What's like the main ones that you see kind of in like young adults? You'd say like in a single filing status.
Usually earned income credit or American Opportunity Credit for school.
Okay.
Yeah. But that's like your first 4 years. Yeah.
Alrighty. And then this one's kind of what I thought when I was also doing my tax returns, because I was scared that I was going to make a mistake. So what happens if you do make a mistake on your tax return, and what is the process in making that mistake not happen and kind of redoing it essentially?
So you get one redo.
Okay. Perfect.
You get one redo. It's called an amendment.
Okay.
And you have 3 years to do that.
Oh, okay. So
if you mess up this year, you still have the next few years to fix it.
when would you be notified that you messed up, or would you ever be notified?
It depends. It depends what the mess up is.
Okay.
You know, they could, for something like here in California for the marketplace insurance, it's called Covered California. If you don't have that on your tax return, that's a 1095A form. If you don't put that on your tax return, that's a really fast letter.
Wow.
It's the fastest letter I've ever seen come. And then some of them they never catch, and some of them you want to fix because it may help you with more deductions or credits or something that you missed. So, you know, you want to get that obviously.
So if the deadline is April 15th,
You have 3 years from
3 years, okay. And then, like, so, and there's, how do I say this? There's, opportunities where, like, the IRS would reach out to you in terms of, like, making that mistake, or is it just, like,
yeah.
you'd have to, like, go
They
back and find it?
Both.
Okay.
There's both. So if you missed a credit or deductions for yourself, most likely you're going to be the one that figures that out. They're not going to. But if you forgot to include a W-2 or something like that, then you'll get a letter like,
and there's no fee or anything like that?
There could be penalties and interest that the IRS charges, yes.
Gotcha.
Yes.
And is it dependent on, like, what you messed up? Or
Dependent on, yeah, well, not what you missed, but how much and how long it's been.
Got it. Alright, so make sure don't mess up. My next question is, what is an IRS audit, and how could I avoid it? Or
Avoid
is
it. So they say audits are random.
Oh, okay. What should I be prepared for if an audit?
Technically, an audit is also a letter that you get.
Oh, okay.
So it's not just an in-person, you know, go meet the tax auditor and sit in their little office and go through that. Technically, when you get a letter saying, we've changed what you owe because you missed a W-2, that's technically an audit.
Got it. And in the case that, like, an audit happens and you have a mistake like that, is it an extra penalty because you didn't fix it, or is it just like?
Well, remember, if you miss something, there's penalties and interest.
Oh, okay.
Anyway,
so it's different.
but they're not that much. I mean, people think they're a ton. They're really not that much. It's less than a credit card by a lot, you know. And they do it like by a month, and then there's a cap. So.
Got it. I guess, like, now moving into, I'm, like, finding, obviously, like, trying to look for different post-grad opportunities, and part of it could be, like, my parents, they're both, like, in kind of the self-employment space as well, and so I'm kind of wondering, like, how, we kind of touched base on it, but, like, just if you're self-employed, like, what is the big change in, like, how to file taxes, and, like, is there a specific way to do so, or is it just kind of?
So when you're self-employed, you have to keep really good records, right? You have to keep records of all of your income and all of your expenses. And you want to kind of categorize your expenses. You don't just go, here's all my expenses, I need to claim all of this, because that's not how it works. You have to kind of categorize it out. Also, when you're self-employed, you have 15.3% self-employment tax on the net income. So
where does that number come from?
The 15.3%. So the employee and the employer share of Social Security 6.2% and 6.2%, and then Medicare 1.45% and 1.45% for the employee and the employer share.
Okay.
Because as self-employed, you are the employee and the employer.
Got it. So you take on both, essentially.
Right. So you don't have withholdings, right? So
Yeah.
because you don't have withholdings, that's self-employment tax, and that's why people pay quarterlies or estimates, whatever you prefer to call them. That's every quarter you're supposed to go, hey, this is my net. I'm gonna pay self-employment tax, maybe also some income tax so I don't get hit with a bill.
Oh, okay.
So I'm gonna pay my quarterly every quarter so
And-
that I don't owe a huge chunk at the end. Because if you owe a huge chunk at the end, they'll penalize you for owing too much.
Like interest.
A penalty. Yeah.
What is the difference between penalty and interest?
Penalty is usually like a one-time,
Okay.
and then interest builds, and it's by like month or whatever.
Got it. So with that self-employment, like tax return, I guess like if I'm going that route, like having it quarterly done is kind of the best way to make sure that those penalties don't occur.
Yeah.
Okay.
And like when you get your tax return done, you can get estimates for the next year, so that even if you make more than that, hopefully you won't have the penalty because the estimates are based on that year that you've already done.
Okay.
So that helps too. But yeah, if you can keep really good records, you can do it by quarter.
Okay.
Easy.
Nice.
Yeah.
I didn't know that I thought it was just all like in one tax season kind of thing for self-employment as well. So
You mean all like due
all the
April?
returns, essentially. Next question I think is like, what happens if I move to a different state?
So it also depends if it's supposed to be permanent or temporary.
Okay.
And school doesn't really count.
Mm-hmm.
But let's say I was gonna move to Texas and I was only gonna be there, I knew I was gonna be there for less than a year, and I kept my voting status here, and I kept my bank accounts here, and my driver's license, everything stayed here, and I knew I was gonna be there for less than a year, I still keep my California residency.
Gotcha.
If I am coming from another state, let's say, and I plan on staying here, my intention is to stay here, I change everything, I can become a resident here. Once you're a resident for 9 months in California, you're considered a resident for tax purposes.
Yeah, I remember doing that on my taxes. I'm from Colorado originally, so going to school here I think like was what kind of made me really like question like what am I even doing when I'm like filing my taxes, because it made me look at like Colorado status as well as California essentially. So I think like looking into the future, like knowing that like I only was going to be here for 4 years because of school, and you saying like school doesn't really count kind of thing, now moving to a post-grad opportunity if it's in a different state, I kind of was just like confused if like I'd have to like completely change like different
Like your
filings or
residency,
like something like that.
No, but you do pay tax in the state you earned it too.
Yes.
So even if you were considered a non-resident here, you'd still pay tax.
California taxes.
Right.
Yeah.
Because you earned the money here. Yeah.
Got it. Yeah, I think that was the main questions I had. The last one that I wrote down is kind of just a philosophical thing, but it's like, why am I getting taxed? But with Tax 101, we can go in a loophole.
Tax 101. So, why am I getting taxed? That's everybody's question.
Yeah.
I know everybody likes to say they hate taxes and they don't want to pay taxes, but taxes essentially pay for everything. They pay for your roads, they pay for your schools, they pay for your firefighters, they pay for, they pay for federal, state, local government, which isn't just politicians, it's services, it's everything, you know. And here we don't have socialized medicine or anything, or like Medicare for all, but in other countries, you know, we were talking about effective tax rate. Our effective tax rates here are very low. And in some place, you know, another country that I'm not going to name at the moment, but they pay 70% tax, which is a lot. They literally pay 70. Their effective rate is 70%, but they get healthcare and school out of it. So here, we really don't pay that much tax for everything that we get. I mean, we actually get a lot more than we think we do. If we stopped paying those taxes, you know, we don't have firefighters. We don't have
like a lot of our public
everything public.
Yeah,
everything public is paid for. I mean, national parks right now.
Yeah.
She was just a Joshua
Just
tree.
in Joshua tree.
So, yeah, we pay to maintain the parks. We pay to maintain schools. We pay to, you know, it's just they pay for everything that we really take for granted and don't think of.
Yeah.
Yeah.
That makes sense. Well, thank you so much for
You're
answering all my
welcome.
questions. I know they were like kind of a little bit basic, but that was like tax 101.
It is
so.
Tax 101. Tax 101 is good. And
But it's-
everyone needs to
Yeah,
understand.
great knowledge and tax information that I need to know, and I'll be ready for next year's tax return.
Yay. And maybe we can do Tax 102.
Yeah. Add up a level.
Yeah.
Awesome. Well, thank you so much
Oh,
for
you're
chatting with me
welcome.
today.
You're welcome. Thanks for the questions.
Of course.
All right. Anything else?
I think
Are we
that's all.
good?
Yeah.
All right.
Went through every single one.
Nice. All right. Well, thanks for joining us for our tax talk, Tax 101. Tiffany, Carolina.
Thank
All right,
you.
and
Bye.
see you later.
Cheers. Yay. We did it.
We did it.
It's great. And like I honestly like I was thinking about it too during the filming. That there's definitely like I